And so here is the Excel spreadsheet that we've been working on together for Pretty Paws Foundation. I am going to transfer only a certain amount of information, very small amount of information from the spreadsheet to Part 6, Financial Data section, and that is the balance sheet. All right, so we are going to go ahead and get this balance sheet completed. We just finished the statement of revenues, the Excel spreadsheet, and the financial data section that was before this one. And here, I just wanted to kind of give you a general idea. And right here, we're going to put the year end. And let me just show you the Excel spreadsheet again, because you want to reference that. And so here is the Excel spreadsheet that we've been working on together for Pretty Paws Foundation. I am going to transfer only a certain amount of information, very small amount of information from the spreadsheet to Part 6, Financial Data section, and that is the balance sheet. So on that balance sheet, we're going to, of course, pull in this date here, which will be the current year projections. That's actually the what it references from the balance sheet. It says for your most completed tax year. You you don't have a most recently completed tax year more than likely, so we're going to go with the projected year there. And I'll show you that in just a moment, how we're going to complete that. So we're going to pull in that cash on hand. And if any of you wonder, I highlighted this information just so that I could point it out in the videos. That's not how you're going to actually send it up to the IRS. You're going to remove the highlights. They don't need to see that. So we're going to pull in certain numbers. And from here, again, inventory, I'll show you that. We'll pull that in. And so I just wanted to show you again that Excel spreadsheet. So let's go ahead and get back to the balance sheet. All right, so here we are at the balance sheet. See that right there? And it said for your most recently completed tax year. And again, it is going to be whatever your fiscal year end. If you're working on something for this year, your fiscal or your annual accounting period ends in December, then that's what you're going to put. And this happens to be the case for a Pretty Paws Foundation. So I am going to put in 12/31 of 2024. And here I do have cash on hand from that Excel spreadsheet of $500, and that's from the statement of revenues and expenses. So we will put that here. No accounts receivable. We don't have anyone that we expect to send us any money from anything they've purchased from us, or any services or anything. So that will be blank. You don't really have to put a zero, but I'm doing that just for the purposes of this video. Inventories. Now, see, it says enter the amount of materials, goods, and supplies you purchased or manufactured and held to be sold or used in some future period. Now, in this case, with Pretty Paws Foundation, we do have educational materials that we have produced and that we're holding for the classes that we hold for our demographic, teaching them how to take care of their pets at home, how to recognize emergencies that they need to, immediately see a vet, just how to administer medicine to their pets, so on and so forth. So I have $900 in educational materials that I have projected that we will need for the year. So I do want to put that there. Bonds and notes receivables. I wish. No bonds and notes receivables as of yet. No corporate stocks. Loans receivable. None of those. And again, this is an interactive fund. If you want to know what any of that means, just go and just hover over that question mark and it'll tell you exactly what that means. Other investments, we have none. But, hey, as time goes on, Pretty Paws Foundation is going to rock and roll. Well, yours will, but Pretty Paws Foundation is made up. So it's a made up foundation. Depreciable assets, none. You're going to be the same because you're a new nonprofit. You're not going to have any of this stuff, but it's telling you here. See, I hovered over that. Again, it says enter the total book value of buildings and equipment not held for investment purposes. This includes facilities you own and equipment you use in conducting your exempt activities. Now, if you happen to have something there, for absolutely put it there, but because you are a new nonprofit, that will 9.5 out of 10 times not be you. And their land will be zero. Now, I do have clients who, and most of them will be a church, the churches that they actually do have land that they have. Um, because maybe they own a church and they have a lot besides the church or what have you. So these are things that you would have to fill out if that is the case. But again, I know with my friends and I who started a nonprofit to restore cemeteries, we didn't have anything like that. So when you're new, I would just put a zero. That's just not going to be the case for you. But again, if it is, you got to fill it out. Other assets, don't have any. But if you do, it says here, provide an itemized list below. But we don't have any. So our total assets, and that will be with the cash and the $900 in inventories, that is $1,400, $1,400. Now, accounts payable, we don't owe anyone. Again, we're new, so we don't owe anyone. We're not having to pay a supplier, as you can see there when I hover over that. It says enter the total amount of accounts payable to suppliers and others, such as salaries payable. Now, I will tell you, if you estimate in your current year projections, if you put that you have salaries that you project you'll pay out in 2024 in your current year, then you need to put that amount here because it tells you right there, see, salaries payable. So if you have that, so if you have 5,000 or let's just say $20,000 that you expect to pay out in salaries and you put that again, that's what you put in your statement of revenues, then you need to do that. But guess what? If you have $20,000 that you project your payout in salaries, then if I were you, I would go up here and make sure that cash was $20,500. So you got cash on hand, $500. You say you're going to pay yourself or someone else. You're going to pay salaries and 20,000, totaling $20,000. Then you need to have that cash available because how else are you going to pay them? So you need to make sure that your statement of revenues, that this balance sheet reflects what your statement of revenues reflect. But in this case, Pretty Paws Foundation says, hey, no, we can't pay any salaries out this year. So, but we do have $500 cash on hand. If you feel comfortable saying you have $0 cash on hand, you can put that. But if you're starting a nonprofit, you should probably have at least $500 of cash on hand. Petty fund, it could be for whatever reason, but you kind of want to have something, excuse me. And if you don't have it, go ahead. It's a projection. Put that we have $500 in cash on hand. And that is because, well, you just should. So I can't put that in because there's always going to be something you're going to need to buy. You're going to need to mail something. You're going to need to copy something. Something is going to be needed. So anyway, enough of that. So here we are. Let's just take out the accounts payable. We're at zero for Pretty Paws Foundation because we do not project that we will pay anyone a salary in 2024. We don't have to worry about accrued payroll taxes. Certainly, there's no interest payable. So that will be the case with the majority of you. And There you have it. Contributions, gifts, and grants. That would be a zero. Now, I will tell you that if you are a nonprofit that has say you are, let me think of a client, you are working with students, you're wanting to actually give a grant, a $500 grant to a girl and a boy, or to a student, excuse me, for, arts. And you want to give them a grant. They're going to be leaving high school, going out into college, and pursuing their art career, and so on and so forth. You want to give them a $500 grant each to a high school student. And let's just say $500 to one high school student. And that, if that is the case, you need to make sure you put that there, and you need to make sure that your statement of revenues reflects this number. It needs to say a grant for a high school arts student, whatever the case is. If you put that in your statement of revenues, you need to allow that here in your balance sheet. See, it says enter the total unpaid portion of grants and contributions you have committed to pay. It's trying to log me out, sorry. That you have committed to pay to other organizations or individuals. Again, so if you say I'm going to give a $500 grant to a high school art student, if, as long as they tell me that, they're going to be going to college, they show proof, you have your own, things that they have to prove, right? But if you say that you're going to do that, then you need to put it here. But in this case, Pretty Paws Foundation is not doing that. We're not giving out any gifts or grants to anyone. We're going to help them. We're going to help our demographic through subsidies, right, for surgeries and so on and so forth, vaccinations and so on. Mortgages and notes payable. We are a zero. Pretty Paws Foundation, and as you are, more than likely it will be zero because you're new. You won't have a mortgage or anything like that. But again, in the situation where you would be, I can only keep referring to churches because churches often will own their own buildings, their own worship place of worship. And so this would be the case. If that is the case and you have a mortgage, you need to pull that note. You need to pull that your mortgage documentation, and you need to put that information in there. See, it says enter the total of your mortgages and other notes payable outstanding at the end of the current tax year. So if you have $100,000 still left on a mortgage to pay for your property, your house of worship, then that needs to go there. Then there are other things. I won't get too much into what a church requires because that's a whole nother set of, things that you would really have to put in to your Form 1023. But I was just giving that as an example because that's one of the ones where I've seen where a client would actually have a mortgage. And so we're going to just stop right there. Again, remember, you're new. You're not going to have any of that. You're probably working out of your home like we do, like we did with our nonprofit, um, excuse me, to restore cemeteries. That's what we did. We worked right out of our home, and that's okay. But anyway, that would be a zero, and other liabilities. That would be a zero. But if you do have other liabilities, provide an itemized list below. So there we have the total liabilities. Add 12 through 15. We have none. So that's a zero. Now, my voice is trying to leave me, my goodness. So, fund balance, that's going to be a zero. You're not going to have a fund balance. A fund balance, now I'm not a CPA, but I have taken many, I've taken at least 5 different accounting courses just to get my degree in business administration with a focus on nonprofit management. But let me tell you, you won't have a fund balance. A fund balance is basically, let's just say a federal government, like how they have many different agencies, and they have to set aside fund funding for those particular agencies. So they have to utilize like a system called fund accounting. I shouldn't say system, but they have to utilize fund accounting. So, for instance, let's just say FEMA has, the federal agency, and they know they need to set aside $1 billion for natural disasters to help people through that process. We know well about that here in North Carolina after experiencing that. I was not one of the ones that experienced the difficulties that Hurricane Helene presented to North Carolina, but of course, our prayers go out to the ones who are still getting through that process up in the Asheville area. Having said that, FEMA, if they would need the government, because they have so many different federal agencies, they would need to utilize fund accounting, and they would possibly have a fund balance. So, say they set aside $1 billion for FEMA, but they only use 500 million of that $1 billion. So that leaves them a fund balance of $500 million. And again, because you're a small nonprofit to begin with, you're just going to not have fund balances because you won't be like dividing your money into different funds. Because more than likely you're going to be spending all of your donations and your incomes that come in directly to you, they're all going to go to a single mission. So your particular goal, you're not going to need a separate balance for those activities. Like again, all of the donations that come in, all of the incomes that come in is going to be provided, is going to go or be spent on your single mission. Like Pretty Paws Foundation, it just has a single mission, right? So you're not going to need that. So that, I hope that makes sense to you. And total liabilities therefore would be zero. See, it says add lines 16 through 17, and it would be zero. And let's go ahead and click next. That's really it. I mean, that's it for this balance sheet. But again, you just need to make sure that it's making sense with that statement of revenues. Don't put numbers over here that you don't have over on your statement of revenues. And certainly don't leave out numbers here on this balance sheet that you have on your statement of revenues, like your salaries, if you said you're going to pay salaries. So that is it for that. Now it says, my goodness, I'm so sorry. Total liabilities and fund balance or net balance. So you would add 16 and 17, but there are none. There's zero. So let's go ahead and click next. And so this is pretty much it. We're really winding down to the end of this application. So as you can see, it says Part 6. Now, this is designed to classify you as an organization that is either a private organization or a public charity. Now, this is really important that you select the right option. It says public charity classification is a more favorable tax status. You hear that? Public charity classification is a more favorable tax status than private foundation classification. Now, if you are a private foundation, this part will further determine whether you are a private operating foundation, right? So let me just show you something here. Let's go on here. So it says so select a foundation classification you are requesting, excuse me, from the list below. I think I had a little too much coffee, so my energy level is kind of off the chart right now. But I want to show you something. One of the things, and I know that when I started, my friends and I, we started a foundation and we got to this part because we completed the documentation ourselves. We did all of the research to make sure we got it right. And we did. But when we got here, we were like, well, where does it say 501c3? I don't understand. Why doesn't it say 501c3? But it's like 509A1 and all of this stuff. And we just kept looking and we didn't see it. And you're not going to see it. You'll see here. I hope you can see it. It says 501c4. But no, what you're going to do is um, You're going to select, let's read it. It should be this one, but it says you are described. So select a foundation classification you're requesting from the list below. You are described in 509A1 and 170B1A6 as an organization that receives a substantial part of its financial support in the form of contributions from publicly supported organizations, from a governmental unit, or from the general public. That is you. Okay, that is what basically 501c3, the definition of it. Your funding is coming from the general public. That is a substantial part of where your contributions are coming from, or it's coming from the government in the form of grants, or are from publicly supported organizations. All right. So that will be the one you will select. You will not go here and select this one. You are described in 509A2 as an organization that normally receives not more than one-third of its financial support from gross investment income and receives more than one-third of its financial support from contributions, so on and so forth. That is not you. Now, I want to show you this though. You see, it says here, you are described in, you get those numbers, as a church or a convention or association of churches. Now, if that is the case, as with my clients who are, you're creating a church, I don't get to select that one. I have to select that one, and then I have to complete Schedule A. But you will be this one. Unless you are, again, actually starting a church or a school or a hospital, something like that, then you're going to select these options. You're going to read through this and select the correct one. Now, I don't ever do this when you are a publicly supported organization and would like the IRS to decide your correct classification, because I'm telling you, this is the one you would select, right? Because this is going to get you, this is telling them, the IRS, hey, I don't need you to actually select that for me. Thank you very much. But I know that this one is going to get me that 501c3 classification, is what I'm looking for. So that's a tax exempt status I'm looking for under the Internal Revenue Code. All right, so let's go ahead and answer this one. Did you receive? Now, I'm sorry, I kind of skipped around there. Number 2, if you have been in existence more than 5 years, you must confirm your public support status. Now, you will have not been in existence for 5 years because you are a new nonprofit. Most of you have just incorporated this year, so you're good. But if, again, I go back to churches, if you've been in existence for more than that 27 months, or in this case, 5 years or more, and you're just going through this process because you want that piece of paper that says I'm on an official 501c3, and nobody can take that from me because I've got it in writing, right? So if that is the case, then you are going to need to answer these questions, but you don't even need to answer these because you can stop right here. If you have been in existence more than 5 years, you must confirm your public status. See, it's telling you to confirm your qualification as a public charity described in 509A1, which that was the first one we selected. In existence for 5 or more tax years, you must have received one-third or more of your total support from government agencies, contributions from the general public, and contributions or grants from other public charities, so on and so forth. I'm not going to get into all of that because you're going to be a no. I mean, you're not, excuse me, you can just stop right here. You don't even need to answer anything because, again, this is just additional to 2. So you don't need to answer these. You can just kind of stop looking at that and click next. Now it's going to tell you, I'm kind of getting all the way to the end, but this is not it. I'm going to get to the end, but there's still another video. Sorry, I've got to give you because I've got to give you some very important information. But see, it says, are you submitting this application within 27 months of the end of the month in which you were legally formed? You're going to say yes, because more than likely you are. Now, if you are submitting this after that 27th month, you're going to have to say no. And then it tells you well, it's telling me because I know it's a yes for me for Pretty Paws Foundation. But see, it did catch it and say that the response is inconsistent with the formation date. See, Pretty Paws Foundation, July 5th of 2023. Um, so that, of course, the system recognizes that I'm within the 27 months. And again, this video is pretending that it was formed in 2024 because it's taking me that long to get this information to you. But you're going to click yes. So you're submitting this application within 27 months of the end of the month in which you were legally formed. So you're good. And you'll click next. And now it says certain organizations are not required to file annual information returns or notices. That's on that Form 990, 990EZ, remember the postcard, so on and so forth. It says if you are granted tax exemption, are you claiming to be excused from filing Form 990, 990EZ, and 990N? We're going to say no. If you say yes, then you need to look. If yes, are you claiming you are exempt from filing because you are a church or you are a women's organization, an integrated auxiliary, school, so on and so forth? It's going to be a no. Unless you are a church. If you are a church, then certainly select that. Churches are not required to file 990s, to report those annual returns. But in your case, you're going to be a no because you're probably the basic definition of a nonprofit, not a church, a hospital, school, so on and so forth. And let's go ahead and click next. And we are to the point where I'm going to stop. And I know this video just can't go but so long. But basically, this is where we're going to go to the signature page. But it's very important that I talk to you about this and how the how you need to upload your supplemental responses. And so let's stop there. And thank you so much for joining me today. And I will see you in the next video. Try to get this one out to you real quick so that you can go ahead and finish with your application. Thank you so much.